Joining us now is America's accountant. That is Dan Geltrude. He's also the managing director of Geltrude and Company. Dan, good to have you on this morning. I see you're all smiles, but there's a lot of bad stuff there happening in the markets. What do you make of that?
I think it's what we really have to get used to for some period of time into the future. The market continues to be headline driven, headline sensitive. So as news goes up and down, we're going to see the market follow suit. I'm not surprised that we had a run this week of the market going up, and now we're seeing another adjustment down. I think that people really have to get used to this is what we're going to see, not get too emotional about it.
Yeah. You know, it's funny that you say, because on the day that a $2 trillion stimulus is set to be passed, we're seeing this huge dive. Yet yesterday we had this report come out about our jobless claims are, 3 million. Why did it react yesterday? Because we had a big day yesterday on the markets.
Well, let me back up for a second and address a word that you mentioned. You used the term stimulus. This is really not a stimulus package. In my mind, this is a rescue package. Stimulus is going to come really after we're past the virus, because right now all we're trying to do is hold on. And are we doing such a great job? I think we're doing the best we can. But when we see unemployment claims going to nearly 3.3 million, well, that's not a good sign. What that's telling me, obviously, is employers, particularly small business owners, are not waiting for stimulus from the government. They're reacting now, maybe emotionally, maybe not, but they're saying we need to shed these expenses to the greatest extent possible and not wait for the government to come in to bail us out.
What do you think about these wild trends? And then there's talk about closing the markets. What are your thoughts? Are we going to see something like that?
I don't think that we're going to see the market actually close unless there's a precipitous dip in the market. But otherwise, the market needs to stay open. I think it's far worse to actually shut down the market. People have to have access to their investments. So I don't think that's going to happen. But what I do think is we are going to continue to see trends like this, Shaun, and we're going to see drops. It's just something we have to be mentally prepared for.
Dan, let's, before we go, if you can, we'd like to give a little nugget to our audience out there, our viewers. What can they do if they're worried about their 401k?
Well, look, if you are close to retirement age and you didn't plan in terms of moving your investments into a more conservative portfolio, then there perhaps is some need for concern. For other people, you need to stick with your investment strategy. Some point in time, you're going to retire, but if you are 10 years out from that point right now, my advice is stick with your investment strategy and just try to ignore this blip that we're in. Eventually, the market will come back.
It'll continue to rally. All right. It's always good to hear from you and sharing your advice there. I'm sure we can all use it right now. That is Dan Geltrude. He's a market analyst. We'll see you again soon. Thanks, Dan.